Hello, everybody, and welcome back to Capital Ideas. I'm Nick Morgan, co-founder of ICAN, the Investor Choice Advocates Network, and co-host of today's episode of Capital Ideas, where we discuss the capital markets and broadening access to the capital markets and the disruptors and innovators at work in those areas.
And I'm Darrell Albright. I'm the co-host of Capital Ideas and a proud board member of ICAN. And today, please join us in welcoming Jasmin Sethi to the episode. Jasmin is a lawyer, economist, entrepreneur, and thought leader with over a decade of experience in the financial industry. She's also on the SEC Small Business Capital Formation Advisory Committee. And through her work with companies and nonprofits, Jasmin promotes the financial access, literacy, and empowerment of individuals. Welcome to the show, Jasmin.
Thank you. Thank you. It's great to be here.
So maybe you could start by discussing some of your work in promoting financial access, literacy, and empowerment of individuals. And I'd love to hear your insights, especially as to how important you feel financial education is to investment access.
Sure. I think I'd like to begin with a little bit of personal background because that is what led to my interest in this area and my passion for financial literacy and empowerment. I am a blind South Asian woman, daughter of immigrants who came here from India with very little. I grew up poor. My father passed when I was under the age of 5, and my sister was a teenager. And my sister and I are both blind. And so my mom was left widowed, in debt, raising 2 blind daughters on a single government income, and with very little financial literacy, actually. So, all of that's kind of compounded against her. And I, kind of experienced firsthand what that meant. My parents had spent money on property for a summer home that they never built, and the property turned out to be swampland, instead of putting that money into either a primary residence or the stock market. And had they put that same money in the S&P 500, my mom would have been in a much different situation as we got older than she actually was. So that was sort of one example of the kinds of financial mistakes that came from lack of knowledge. And so as I grew up and kind of saw my mother struggling, saw my sister going to college and trying to start to learn about credit cards and finances, I became very interested in money, frankly, and access to information about it, access to opportunities for wealth accumulation, and inequality in that access. And so I always joke that our financial security, our kind of trust fund, because my parents didn't give us a trust fund, was education. So my mom, being an Asian dragon mother, pushed my sister and I to get very educated. And she saw that as the key to our financial security. And so that is what she gave to us. And so my sister was very, went ahead of me. She went to University of Pennsylvania and then Stanford for graduate school. So the bar was set very high. And so basically the only place I was allowed to go was Harvard. And so I went to Harvard for undergrad, and then I couldn't decide between a PhD in economics and a law degree. And so again, since I had an Asian dragon mother, I got both. So I lay all that out not to sort of brag about credentials. It's really privileged. I feel very privileged to have had the education I've had, and I do feel it's a responsibility to do something useful with it. But to say that that was my way of, studying these issues. So I studied a lot about inequality and policy at Harvard, and I, felt a real compelling need to do something about it. So that's driven my interest, and I would say throughout my career, and I've done a few different things on the public sector at the SEC, in the private sector, in asset management, and now with my own business, I've really tried to focus on these issues. How do you empower more people. I think of financial empowerment as the all-encompassing term. And that's a combination of informing, but also making it easier for people. We get information overload nowadays. So you can't just tell people what is good to do with their money. You have to make it easy. You have to operationalize certain norms. You have to have usable platforms, sometimes even fun and, gamified things. So, yes, I know it's a bit of a long answer to your question, but hopefully that gives context around my passion for this area.
No, I love your story. It's a great story, and I agree. I mean, on the gamification, I have no problem with the gamification because I think it's a way of engaging more people and helping foster financial literacy across the nation. And even in a lot of schools, we're not even teaching financial literacy, which is so important right now. That should be done. So what do you think we could do to ensure that more people have access to even financial investment information?
So I definitely think we should have it as part of our education. I do think that kids should start learning about financial education starting from middle school, starting with budgeting. And before you get to investing, they have to understand income and expenses and saving, and then go into investing. So that's something I've done a little bit of mentoring in that area, but that's something I would like to do more of. I think, there are a lot of things out there, both for kids and adults. There's already a lot of platforms. Some of it may just be getting best practices and getting something centralized. And I think that's the problem, is it's very disaggregated, right? So I think now some states have new requirements for financial education in schools, but I don't believe there's any standard curriculum. Like, it would be great if there is, some kind of best practices. Everybody should graduate high school or even middle school with this set of knowledge, right? About investing, about the tax code, maybe, even some basics about taxes. And then I think for adults, there's two worlds, and this is something that I focus on a lot. There's two different worlds we have in our society. We have those who have access to a 401k and those who do not. And they're very different worlds. And so I am, I've done work on both. I've done research and writing for both educating individuals and institutions on both. My current real focus is those without the 401k, because I think they really lack the ease. And again, there's a lot of platforms. There's a lot of robo-advisors. There's a lot of easy ways to get investing in an IRA and everything. The hard part is making it easy. And it's not hard, actually. It's just that it has to be, there has to be some operational, steps taken by, companies and individuals. So to make it happen. And so I am really focused on that. I am working on a curriculum myself that I want to actually offer out to those without access to a 401k. That's going to be, some education, some making people do some interactive exercises, but really directing them to other platforms. I'm not going to run my own investment platform, but there's just so much out there that I think we can already take advantage of.
And fortunately, there are some really great digital savings apps that have emerged to help people without a 401k save in different ways, whether it's through roundups or more painless ways of saving and building a nest egg.
That's right.
You are on something that most people probably don't know anything about. The SEC has an advisory committee called the Small Company Capital Formation Advisory Committee, and you're a member of that committee. Maybe for our audience, for those who don't know, could you just tell us sort of what is the purpose of that committee? And then maybe if you can tell us some of the things the committee has done or recommended.
Sure. Yeah. And this committee, it's fairly new. I think it's less than 10 years old. So there are other advisory committees that have been around longer. So this is one that is less known. And it's kind of like an advisory board. So we meet and we engage with the public. So we do bring, our meetings are public. There's public transcripts and a public webcasts as well. We issue recommendations to the commission. Sometimes the recommendations go broader than what the commission can do. They might touch on congressional action or maybe agency collaboration. And they, it is, and I also engage speakers. We also bring people to inform both the committee and the commission. So I think it's a great learning experience and an opportunity to try to contribute to policy. And the committee typically has looked at issues that affect capital towards small businesses and also areas where the SEC might have unintended consequences. So a lot of what the SEC does doesn't really touch directly on small businesses. They are mostly focused on public companies and on investment funds. But indirectly, sometimes their actions could have an impact on smaller companies, non-public companies. And as well as, there might be certain things they could do that could help capital. So one of the areas that's been talked about the committee multiple times throughout the years is the accredited investor definition. Interestingly, that does seem to be a bipartisan issue on the committee. I would say people who kind of swing both ways in terms of their politics, but who are in the small business world tend to support broadening of the accredited investor definition, even though, congressionally it tends to be more politically divided, but I would say the committee is a little bit different that way. So that's kind of interesting because people who are kind of in the business world don't necessarily see it as a political issue. They see it more as what can practically help small businesses. And the thinking around that, it is multidimensional. I've learned a lot from my peers on the committee. It's not just the money limits themselves that can be a barrier for investing, but it's sort of the implications. A lot of times diverse founders don't have as high net worth networks. And so it can, having those requirements to only market to accredited investors. If you're a startup, a diverse founder, minority founder who doesn't necessarily have, lots of accredited investors in your network can be much more limiting than if you could actually market and, more broadly, and maybe, people might put in smaller amounts, but you have the ability to market to those. So that's an area of interest, kind of along the same lines, crowdfunding, which actually the SEC's own reports have shown have actually been helping to fund more diverse founders. So kind of in line with that theory of, broadening access can actually increase funding to diverse founders. Crowdfunding has shown that, so as they've allowed that. And there have been recommendations around broadening that as well, and also taking away certain hurdles, like requirements around audited financials, things like that. So essentially sort of hurdles to marketing to, a broader base of investors, I would say, is one of the most common things the committee tends to look at.
Well, it sounds like with your background and your professional experience, you are ideally suited to help on that committee to advise the commission, and the two issues you just described are near and dear to our hearts. So we will keep an eye on your work on the committee, and we really appreciate you coming on the program today. So I think maybe we'll leave it there for now. For anyone else who wants more information, about ICAN, you can go to icanlaw.org. And otherwise, we'll see you on the next Capital Ideas. Jasmin, thank you very much. Dara, thank you. And thanks everyone for listening.